Hi, my name is Alex Carlucci with Gustin Cho Associates. I'm here with Eric Jeanette from Dream Home Financing, and today's topic is going to be what is going on in this housing market. And the reason I chose this topic today is because I can't figure it out, and I want to take the temperature of some other people that might have some what they're seeing on their side, their part of the neck of the woods or whatever. And I just keep thinking that we're going to have a price correction. I keep thinking rates are going to drop. I keep thinking um, that something's going to change and I'm not seeing it and I don't know what's going on. So, I mean, is inflation killing people? Is it causing them to stop buying houses? Or on the other hand, are people doing so well because of inflation, they're buying houses? Are prices coming down? Are builders overbuilding? Is the supply increasing? Um, our rate's going to come down. Our price is going to come down. So, Eric, what do you see in your neck of the woods out there in New Jersey, New York area?
So, well, I'm seeing some things everywhere, obviously, because I'm kind of connected to all the markets. But in the Northeast, prices are not going through the roof anymore. They're coming down a little bit or a little bit stable. Um, in other markets like Florida and some others, we're seeing price declines happening. I'm seeing that. I'm part of the MLS in certain areas, and I'm seeing constant price reductions versus 2 years ago, the prices were you know getting bumped up, and you're having bidding wars. That's not necessarily the case anymore. So that's what I'm seeing with the housing prices right now. But I'm I'm seeing some other economic indicators that would lead me to believe that the next thing that will impact would be housing. And, Alex and you and I talked about this the other morning for a while, and things like cars. A lot of when you had not too long ago, car dealers were putting these ridiculous market adjustments on the vehicles because you know people were frantic, like they were with housing, like they thought if they didn't buy something now, there would never be anything left. So they were paying crazy dollars and increases for things that weren't worth it. And now I'm seeing, these dealers are stuck with cars and they can't sell the used cars anymore. And all of these things are the initial, like the calm before the
Dominoes,
storm.
the
Yeah,
dominoes.
right. It's like you talked about a tsunami. When a tsunami Before the tsunami happens, all the water goes out, right? Because it kind of sucks it all out first, and all of a sudden it looks like extremely low tide. And I feel like that's what we're starting to see in the housing. And then at some point, that giant wave is going to come.
So
So that,
let me just say some of that. So I agree with everything you're saying, and that's deep down how I feel what's happening. But you watch the talking heads on TV and everything's amazing, and I don't see that. I talked to a realtor here and there. They're not as negative Nancy as I might be, and they had a listing and there was multiple offers and it was gone in a day. And then I manage a phone number, a couple phone numbers on the internet that's all over the nationwide. I manage emails, and those have fallen off a cliff. So from my
right.
perspective, I feel, I feel like that my clients, when they do make an offer, there's no one else offering, and they're getting all the credits they need, and there's no stress anymore. So from my perspective, I feel like we are slowing down. It's still active. It's down 40, 50, 60% in activity, which is bad for our careers. But I don't know if I'm crazy and that's the reality of the whole United States or everybody's perspective. And if anybody out there can tell me their perspective, what they see, that'd be great. But my perspective is that we're going through a slowdown. Inflation's catching up to people. They're starting to worry about groceries, credit card bills. If their car's broken, they got to buy a new one. They're getting that sticker shock. And then they go out and I write them a pre-approval and they see what's available for that price. They don't want it. I just feel like it's out of whack in so many ways. And there has to be a correction. And California came up with a good idea, which I'm kidding when I say this, $50 hour minimum wage. That would fix it. Now people will be able to afford everything, but that would cause
Yeah,
inflation. That'd be more inflation.
for about 30 days until
Yeah,
half of the people lose their jobs because no one wants to pay
right.
$50 an hour.
Yeah, the
You know,
businesses wouldn't be
yeah,
profitable unless they raise the burgers
right,
to $30 now instead of
right,
18. So
right. I mean, it's not just burger places. It's anywhere that where they have employees, you know, even the businesses that could maybe get away with it would be like the plumbers when they have all the people working for them. They have a higher hourly rate and they can make that work, but not the Walmarts of the world and everywhere else. Just can't survive with that. So yeah, that's not gonna happen at all.
So you agree that the talking heads are just talking up the market, maybe to save us from a war, or maybe
Well,
to stop the market from falling and causing its own recession? Are they just
well,
lying? Are they
yeah, I
lying to
mean,
protect America?
we could get political a little bit if you want to, but like the talking heads don't want to not have a war. War makes money for the media,
Right.
you know? And also the talking heads are the mouthpiece for, whoever's in control. And if they want the public to feel like everything's okay, it's all calm, you know, like Kevin
That's
Bacon in
that
Animal
that's
House when he got
but
run over
that's
by the crowd.
if that's the case, that's dangerous to the people that there's the last few people that might go out there and make a purchase that's out of their league because they believe what they're seeing and they could get run over the most. And that's what worries me with these talking heads, you know.
Yeah.
If they go buy Nvidia at this stock price, that's it's overpriced and they could get crushed. Why do they want that for people?
Well, they don't care about the people. They care about their power and themselves. They
Right.
really don't care. And they actually yeah, it's those of you who are watching this, Alex and I are big conspiracy theorists, okay? And so, you know, they want, in my opinion, they want people to have money problems, so they rely on the government for the handouts. So that way you have to keep voting for the person who's handing you the handouts. You're
Yeah.
going to be, almost like like you're addicted to the government provided support, you know?
Yeah, and it's kind of like a child with discipline. They like to be disciplined. They don't think they want to be disciplined, but they it's better for them. And that's how
Yeah,
people think that if they're being taken care of by their big government and they listen
sure.
and behave, they feel like they got someone comforting them through this tough world that we live in, you know?
Yeah. Yeah, so I don't listen to the talking heads because I feel like they always have some kind of an agenda.
Right.
And I rely on what I'm seeing and what I'm hearing from when the phone rings,
Yeah.
and I have to mute it for these things because otherwise all you'd hear is the phone going. But it's a when I hear real stories from real people, that's how I form my opinion. And when I see what's happening with listings and I see what's happening with, businesses closing down on the highway and cars not moving and all these different things, I start to put all the puzzle pieces together myself. I don't rely on, someone else to give me their BS twist or spin to it.
Right.
So,
Everybody sees this and points it out, and I've been seeing it my whole life. I've been doing this 27 years, looking at mortgages, looking at people's income, looking at people's assets from all walks of life. And there's so many million-dollar homes being built and sold. Where is this money coming from? Who are these people? So sometimes I say, yeah, there are million-dollar homes going. It doesn't mean when it slows down that it's dead, but the fact that there's so many, where's the money coming from? If the average salary is 70 grand a year, who's buying these million-dollar homes? Is it corporations? Is it families passing it down to their children? The money? I mean, that's what confuses me the most about what's going on in this housing market
yeah,
is I still see these transactions happening at these high prices in
yeah,
certain neighborhoods, you know?
yeah.
So,
Now, the other thing that we didn't touch on, and I'm starting to see this in certain areas too, is um, the towns are greedy, right?
right.
So let's talk about, any town that anyone's watching this lives in, okay? Say 4 years ago, your town maybe had a balanced budget and they were, hello, Dale
Hey,
Ellentelli
Dale,
joined
we got
us.
Dale from Guston Show with us, just joined
Yeah.
in.
So, maybe the town they were able to manage their budget. They were able to pay, the police and the crew that does the roads and like all of that. There's a gigantic budget for a town, okay? And it was based on the taxes, property taxes, for example, that were, say, here, let's say $3,000 a year. right, in a Midwest town. And now housing prices double. And so now these towns are starting to, if they haven't already, a lot of towns still haven't yet, and they're just doing it, is going out and reassessing everyone, and taxes are going up.
Right.
And why? I understand you may want to run and reassess it, but then reduce the tax rate, because it's almost like taxation without representation. For those of you who took history class in elementary school, if the cost to run the town didn't double, then why are you doubling the property taxes? And so what's happening is I'm hearing this and seeing this, is some towns are now jumping the taxes up, and people are like, I can't afford this anymore. I have to go do something else. I have to leave, or I have to, make a change, whatever that is, because now the taxes are really what's putting them over the top.
Yeah.
And all of those things haven't happened. All of those tax assessments and those adjustments and the rate adjustments haven't happened in every town in the United States yet. But it's continuing, and it's causing a bigger squeeze on people.
Right.
So
And don't forget, in Florida and California, insurance is going up. So we
right.
just keep compiling the groceries are still going up. Even though they say inflation's coming down, I've noticed the biggest increase in my groceries in the last 6 months than it was the prior few years when inflation was actually higher. So, I mean, all this stuff is compiling up and putting a squeeze on people. They must have a lot of savings, and they're doing their best. And eventually the savings are going to run out. But I mean, I just feel like people are getting squeezed, and it's going to bring something bad to our system. But I don't know, Dale, me and you've talked about this. So we were just talking about what's going on in this economy. You watch the talking heads, they say everything's great. The people I'm talking, the amount of phone calls are coming in, the demand, all the people I talk to in this industry, most people are slow. Realtors had their worst year last year, and it's getting worse this year. But then people are saying the housing market's great. The CEOs of these real estate companies are saying everything's great. Dale, what are you seeing out there? Is it great? Is it horrible?
No,
Is it falling apart slowly, or is it no cracks at all? I'm just delusional.
no, I don't think it's great. I think there's an affordability issue. Like you guys were just talking about, every aspect of your life, you're seeing the inflationary, the grocery store, the gas pump, no matter what it is. You can't go to a professional sports game without spending $400 or $500. But I mean, it's, I just listen. There's a couple of housing podcasts that I listen to, and the Fed refuses to pivot. Some people believe that maybe the Fed is trying to break the housing market. Now, what Eric was just talking about before, the payment shock from the increase in property taxes creates distress, and it's enough for some people to get them out of the house. But the problem is, where are you going to go? Because rents are going up. I mean, the whole situation is fragile. I would not say it's solid.
Dale, I like what you said about some people think they should break the housing market. I'm in that camp because I think so there's deflation, correction in this market, or there's inflate and keep it inflated, and hopefully everybody gets raises, and our productivity is going to get better, and we're going to grow into being able to afford all this inflation. I come on the camp of deflate these prices and let it correct, and then fix it from there, versus the Fed to drop the rates right now because the housing market's slow. And then me and you get busy as mortgage brokers because all of a sudden rates are better. And now all of a sudden prices never go down. And then the 20 to 40s, I'm seeing all sorts of things on Instagram that everybody's putting these videos up about how they can't afford to live. I'm not even sure if that's real. That's what this topic is about today. But if that's the case, these younger people are not. I mean, some people are saying that they don't even plan on buying a home in their lifetime. It's just some luxury item that they don't ever dream of anymore. It's not part of their dreams like it was when we were in our 30s, Dale or Eric.
Right.
They just
Right.
nixed it out of their plans, But they're going to have rich parents because their parents did so well, and they got a bunch of money in the stock market. The stock market's going up. They're earning 5% on their bonds. Maybe that's their plan. I don't know. I don't know how this whole thing's coming together and what the answer is, or where we're going, or what's going on today. That's why this topic came up for me.
Mm-hmm.
I got a deal closing Monday where you've got the father, who's a friend of mine, his son, and his other son all on the mortgage together because they want to get the house that they want. The sons can't buy houses on their
Right.
own yet.
Right. And it went from the man back in the 50s, 60s, and 70s buying the house and the woman stayed at home. And then they had prices went up again because now the wife started working. It took two incomes to afford the inflationary pressures of the 80s, 90s, and 2000. Now you need to have the kids on the mortgage to qualify. I mean, that's where it's
Yep.
going. It's 3 to 4
Yep.
people on a loan now.
Yeah.
Yeah.
I got a phone call like that about 2.5 hours ago. Same thing. About 3 or 4 people were going to go on this mortgage.
Right.
The son and the brother who wanted to buy the house, and the father, and like, I don't
Yeah.
know,
The
a
rich uncle.
landscaper or
Yeah.
someone like that. They're all
It's
getting
getting
in on
like
it.
that. And people still want to buy it, even though they really don't afford it. And they got a rich uncle that will co-sign for them. And that's where we're at in this society. It's,
Yeah, I think that rates should stay in the between the 5 to 7 range. That should be the sweet spot. And the other thing that needs to not happen is raising of the FHA loan limits every year. If they really want to control the housing market, stop raising the FHA loan limits. That'll help put pressure on prices coming down. And all of these things. So they say one thing, but then their actions say something else.
So let me
And
tell you what's going on. This is kind of down that thing. So there's a thing called a budget deficit. We're running a 2.5 trillion budget deficit. What that means is that we're spending 6.5 trillion in everything that the government does. We get taxed, and then 6.5 trillion a year is getting spent. Well, the tax receipts are only 4 trillion. So we're running a negative 2.5 trillion. So that's getting added to the national debt every year because we don't have the revenues for it to cover it. So that's what's going on right now. And that's usually done in wartime or major recession. So we're not in war, and we're supposedly not in a recession, and we're running at that negative $2.5 trillion. So that's like the gas pedal of the economy. So there's things going to like the CHIPS Act, infrastructure. So there's probably construction people, chip makers, all doing pretty good. They're getting government money. And then you get the Fed raising rates, putting the brakes on the economy. And you got these two powers. And maybe that's why it seems so bipolar to me, is maybe part of the economy is great, part of it's a disaster. And that's why we're seeing this different aspect of the economy,
it's possible, it definitely is possible. But
That's taxation without representation. I didn't say send $95 billion to Zelensky. 95 billion, that's 1/10 of a trillion. We're just sending money like that to,
right.
Is that nothing now? $100 billion is just chump change?
Again, the conspiracies are that money gets secretly, some of it, fractions of it, get sent back in the back pocket of the people who agreed to
Right.
send it.
Right. So we're a cash
Yeah.
station. Yeah, it's a cash
Right.
station for the lobbyist and
It's a
a cover
yeah,
charge.
it is a laundering of money.
Yep.
Is what it is.
Yep.
It's
Absolutely.
the laundering of money.
if you want to get real conspiratorial, maybe they know what's going down. They're trying to milk as much as they can before the ship collapses. I don't know. It's a run for the exit as much as we can get. Let's do it now. We know it's going down. We're gonna default on this debt anyway. Let's get as much as we can. Turn it into gold and put it in our basements.
So Alex, Eric, one of the housing podcasts that I listen to, the economist who comes on once or twice a week,
Yeah.
he firmly believes that the Fed is very confused right now, that they don't know what to do in this post-pandemic inflationary environment, that they're trying to compare it to something in the 1970s, and he said it's not a fair comparison. They said they really don't, they're concerned about their legacy. A lot of these guys are in their 70s. It's just interesting what this guy's saying.
I think the inflation number is a lot higher than they're posting. I feel it, and I'm not in my grocery bill in the last year when I get the same thing. I'm an old guy. I get the same thing every week. I don't vary too much at all. It went from like a 2 to 220 a week that I would go to the grocery store and get what I need, and then now it's 330, and that's not 3% inflation.
No,
That's 30% inflation. 40, that's big. My house when I bought 3 years ago went up 50%. It's not 9%, 2%, 2% like they're saying. Cars went up like that. So everything is a lot more out of whack than we're being told. And I hope that they know that and they don't drop rates, even though that's bad for my business. I think we need to fix this economy by breaking it. Let people force their hand to drop prices of goods at Walmart, force them to sell that bicycle for that they're selling for 300 for $100 than it was 4 years ago. Maybe 120. It can go up a little bit, but not triple. Force these corporations to sell things for less, force people to sell their houses for less, force the car dealers to get rid of these cars way less. I hear they're stacking up used cars on their lots because they don't want to start lowering those prices because that crushes their whole inventory of used cars. So they're holding
Yeah.
on. They're holding on for some miracle that the Fed's going to lower rates and people are going to be buying all the used car from them. People are sandbagging their sales and not selling it for lower prices right now. So,
remember also that all of these higher prices that you're talking about, there's always a sales tax tied to it. So, right? And most instances that goes to state, not federal, but they're not going to tell you that they love the fact that the population is paying way more for goods and services now, because that just means that they're generating more tax revenue on the sale.
right.
And the same thing.
And these corporate profits are really good because they're passing it along to the consumers. It's not that this is good for the economy because these companies are reporting great earnings. It's on the backs of consumers that can't afford it.
Mm-hmm.
Yeah, absolutely.
Yeah, and we got monopolies starting to. Capitalism works. Its one flaw is monopolies, and they're just letting monopolies fly around right now. No one's getting in anybody's way.
Well, it's not true capitalism when you have, politicians with their thumb on the scale,
Right.
And when they're kind of together and working with each other, scratching each other's back, now it's not true capitalism anymore when you have these other factors.
Yeah. They
It's
don't,
like
they don't let companies fail. They're not letting companies. Yeah.
It's a game that's rigged.
Yeah.
Right.
It is.
Are
It's a
we gonna
game
get
that's rigged.
Are we gonna get zapped for saying this?
What's that?
Are we gonna get zapped for saying this?
No, I mean, we're not
Maybe
going too
a
far
tank's
here.
gonna pull up from my front door and say, "Come on with me, sir. You can't be saying that on the YouTube."
We're not going too far here, but again, the original topic was, what's happening with the housing market, and then we talked about, whether it's a good time to buy and all that. But to me, what I'm still telling people is, look, if you're going to buy the house that you're going to live in for a while, long time, and it's your perfect house, your dream house, you just get it.
Yeah.
If you can afford it, if you can meet the DTI requirements, and your dream, like, if you wait for rates to be low again, then it may never happen. And then when it is, you might not have the house you really love at that moment. And then you could be in a bidding war again with people.
Not at the price point you want, and you probably have a more competitive situation when the rates drop. You got
Right.
more buyers jumping into the fray.
Right.
Yeah,
So
it's been 4 years of craziness, and I thought we would have been out of this craziness by now. But look how 4 years just flies by. Your kid goes from age 5 to 9, and they didn't go to live in that nice house that you could have put them in because you're waiting and waiting.
Yeah.
And your life's gone. Once your kids are 13, they don't even want to talk to you anymore. So you don't want to miss out on your child's life in the home that you dream, because that's the magical time for children.
I really believe if you can bite the bullet and buy a house, let's say at 7.5%, there will be a time where rates will come down, but you'll get in at a price point that you can tolerate. And then down the road, if you wait 3 years, like Eric, like you guys were saying, that house is going to be, it might be 50 grand more.
Right.
Yeah.
Right.
Exactly. You just can't. It's like you're trying to time the market and all that, and it never
Yeah.
works. I could never do it. Every time I've told Alex, because Alex is a stock market guy, if you want to lose all your money, get a stock tip from me, because I always enter and exit at the opposite times. It's just never.
That's how the market works. It causes the most pain to the most people. That's how it works. It doesn't follow a lot. The reason it's probably rallying right now because there's a lot of people don't believe in the stock market and no one's in. So they're just buying it up because no one's selling it because they can push it around like that. And
yeah. Right. So when you're talking about buying your home where you're going to live in, you need to set the investment aspect of it farther down the priority list. Okay. And if you want to protect yourself, then just make sure you're buying in the right neighborhood, in the right area, that the house has got things that other people would want to. Don't get some, white elephant that well, you're the only one that likes that crazy stuff, whoever this thing's designed with, spiral staircase going to the master bedroom or something, you
Yeah.
know, you know what I mean? And then you'll be okay.
So on the flip side of the Fed breaking the market and causing deflation and coming to save the day, there's them keeping these prices where they're at, lowering rates and stimulating it from here, maybe prematurely. That could cause what's called hyperinflation or just a rapid increase in inflation, which Venezuela, Argentina, their stock markets went from like 300 to 20,000 in the last year because we're passing our inflation to them and they can't handle it. They don't have the tools that we do. We are the dollar. We print the dollar here. We can pass it along to other countries. Now, there could come to a point where that inflation comes inward on us. So we have a rapid increasing inflation. If you look at history back in the Weimar Republic in the 1910s to 1925 range, owning a piece of property was the best thing to protect yourself from the hyperinflation. You have dollars in your bank account, they become worthless, and your wheelbarrow is worth more than your bank account. I mean, it was silly stuff like that. Loaves of breads were going for billions of dollars. So I mean, I'm not saying that's going to come. I don't want to scare anybody, but if inflation's here to stay, owning a piece of property is a great way to protect yourself because it will go up with the inflation rate real
Yeah.
aggressively. So you
And
never
we've
know.
seen that with our own
Yeah,
houses. Yeah.
yeah. Take
Yeah.
that 20% down out of your bank account, put it in a house, and it might be a nice hedge against your cash that might be worthless and it
And
were devalued at least the
yeah,
cash.
the other thing I'd recommend is if you want to own your own place, but you're concerned about the market, if you're willing to buy a multifamily home,
Yeah.
you know, having
Yep.
the rental, along with your primary, your payment, which will be lower, as compared to what you would have in a single family residence, because some of that payment will be offset a little bit by the rental. And there's always people always need a place to rent. Also, you could insulate yourself a little bit from some of the market declines and the pain you could potentially endure by. So thing is you don't have
Yeah.
multifamily homes in every market. Some markets it's
But
like,
I think that could become a more popular thing going forward, the construction of multifamily housing, given what's going on.
I'm hearing that's happening right now, that there's a lot of construction of that, you know.
Yes.
so yeah, I mean, construction of multi meaning many units.
Right,
Um,
48 unit buildings, yeah.
right. And so, however, you know, I know the program that a lot of people have difficulty, finding a lender to help with is that FHA one-time closed construction loan, right? And there are, when I mean a handful of lenders that are doing it, but they're not doing it for multifamily. They will not let you build a multifamily.
Right,
So that's interesting.
yeah.
Yeah.
And don't forget, guys, it's an election year. That's why it's really squirrely out there too. So who knows what that effect is having on this housing market too.
Yes. Yes.
That's a
Yeah,
wild
so
card.
right. And so we talked before about, the influence of politics, and we're gonna be fed a mirage leading up to the election, no doubt,
Yep.
right? So we're going to be put on a morphine drip that's given to us by the media,
It's
and we're
like,
going to
it's like
think
it's
everything's
okay to lie
okay.
now. It's so weird that lying is okay now on our media. I mean, like they can just maybe it's always been this way. I don't know. Maybe I'm
Every
getting older and wiser.
everything has gone up at a higher rate than income has gone up. So
Yep.
you know,
Stagflation.
If you look at a chart, or if you go on the Fed, it's called FRED, FRED. It's the federal government. They put this out. They'll show you that the average salary was like 30,000 of an individual back in 2000, and now it's 35,000. And if you look at the average price of the house back then, it was 169. I remember seeing this, and now it's like 416. You could see that income went up 20%, but houses
yeah,
went up 4 times.
Yeah.
yes,
That's why
Dale,
you need 3 or 4 people on a loan now.
yeah. I wish we could share that graph, Alex, that you have shown before, where it's like the alligator mouth, right?
Yes.
When the alligator mouth is closed, it means that the gap between the average home sale and average income is narrowed. But now we're at one of the all-time uh, greatest gaps in history, where the distance between the average income and the average home price is so
It is.
great.
It's
People,
worse than the 2008.
people,
It's
that
worse than
doesn't make the
2008.
DTI doesn't work.
Yeah. So
Doesn't work.
when I say it's worse than 2008, that affordability index is worse than 2008. I think 2008 was a different animal. There was more bad loans out there, but we don't have that.
Well, there's a lot more inventory back then.
People qualify right now for their loans
Yeah.
with the 6 people on the loan. But the fact that if one person wants to buy a house, they just can't qualify. I mean, it's the worst affordability index in the history. If you guys just Google a median income of a household, it's like 69,000, and the median home price, it's like 419. If you look at that chart, it's just like dwarfs anything in history. And if you look back in the 80s, when people say rates were 20% and we think we were fine, yeah, but you bought your house for $40,000 and you made
they paid 40,000 for
and
it,
you made
right?
$15,000 a year.
Yeah.
You're like 15 DTI. People are at 55 DTI now, 60 if
Yeah,
you're
plus
at
life.
20% interest rates. So
Yeah, it was 18 and change, and
I
like
hate that
81.
argument, by the way.
Yeah,
I hate that argument about rates are 20% in the 80s. What are you guys bitching about? But go ahead.
yeah. Well, because I mean, I don't like that argument either, because at the same time, life didn't cost as much then.
Right.
Remember, just think about this. Most people were not two automobile homes. Most people were not also didn't need two incomes. You didn't have cell phone bills. The cable, not everyone had cable TV, and there was no internet bill, and there was, like, the list goes on and on of all the things
And
that
people
we
ate at
didn't have to
home.
spend
People
on.
ate at home. It wasn't a junk food fest every
Oh
day.
yeah, yeah, absolutely. I mean, there were more home cooked meals, fewer people eating out, you know, and it's just, people have gotten used to these luxuries and these things that we didn't have in the 80s, and or especially the early 80s, And so yeah, it you could deal with a 15 to 18% rate on your mortgage when the loan isn't that high, you
Right.
know?
I'll take a $40,000 house at 18% versus a $400,000 house at 7%, and making that money back then and all day long. I mean, people were not doing what they're doing now. It was, if you look at the debt to income ratios back then, it was like 15 to 20% average. Now it's 42, 43% average. So
Yeah.
people doubled their stress level of what they're spending on their house. So
Yep.
so that don't look at rates, because the houses were cheap.
And taxes
Yeah.
and insurance.
Yep.
I mean,
Right.
everything.
Everything. Yeah.
And now
The car
everything
was
has gone up.
$500,
Everything has
$2,000,
gone up exponentially
but not the
greater
income,
than
but not
greater
the
than salaries.
right. And that's what happened to the dollar. It's being devalued. And when we have all these dollars across the country, in the overseas, these countries are storing those dollars, and they're realizing that they've lost money just by holding it. Right? If you held money for the last 15 years in China, they're looking like, I can't do anything with this money anymore. We just got railroaded, and they want to attack us for that. I mean, it's not just we're suffering, we're causing suffering around the world. Hyperinflation in Argentina.
Yeah, and this is why I've said before in other videos we've made and spoken to you offline and on the phone, that the biggest mistake was keeping rates in the twos and threes for a couple of years.
Yeah.
That allowed the market to reset, and allowed the bidding wars and the prices to escalate. If they were smart, like I've said before, they drop the rates for maybe 6 months at the most, and that's not enough time to get enough comps in the system to drive prices up, but it's enough time for people to refi and help their home cash flow,
Yeah.
which can in turn help the economy, because now they got more money to spend on goods and services versus all of their money going to a mortgage payment,
It was insane. I mean, I was so busy. I'm like, why are they lowering them again? Why are they doing this? Stop. Let's spread this over 5 years. Let me make a good
No.
living for the next 5 years. I don't want it all in 3 months,
I want it all for a short time, little blips, enough
Yeah.
to refi, not enough for people to put their houses on the market, list it, have, whole thing. By the time, all that happens, rates are back up again, and it's like you're at the train station, get off and refi really quick before the doors close in the train again.
Right.
It's like you have a window. Here's
An
a
hour.
window.
You have like an hour. Like rates were six
Yeah.
and a quarter last, 3 weeks ago. Now they're 7.5. I mean, if I sold that, I couldn't have got the loan in and locked it fast enough.
Yeah, but what we're talking about are drops in the rate that
I
really
know.
make a difference in people's, take home and not their take home pay, but what they get to keep and not spend on housing. So that should be just a few months and then back up to like between the 5s and the 7s in that range again. And that's it.
Yeah.
Well, one thing
Dad.
I've heard is if the rate there was notably more activity, more applications when the rates were down close to 6. When they get up to that's how fine of a line we're walking right now.
Right.
Do you know what I mean?
Yeah. Like
If rates drop to the high 5s or 6, you'd see more activity.
Right.
You go up to 7, it kind of turning the faucet off.
But again, it's dangerous that we get too much activity and we don't get that correction. We're going to keep this inflation here forever. So it's a catch-22. I don't know what the answer is.
Alex, really the only what I'm listening to and I'm reading, really, and this is I don't want to see it happen. Truly, the only thing that's going to create a correction is a jobs loss recession.
Right. And I think that's coming. I really do. But I don't think they're going to tell us on
tax
TV.
rates distress. Houses will go up. We saw the ugliness of that in 2008. I mean, we saw.
Let me point something. I've been studying the stock markets since 1989. I've been involved in the stock market, bond market. I used to be a bond trader. What I saw in I didn't realize this was happening. Japan and Germany right now and UK are officially in a recession. And all three of their stock markets are all-time highs. I've never seen that in my life. Something's wrong with the system. If they're in a recession, the market's going down. Things correct. But companies go out of business. People lose jobs. There's a reshuffling in this. Only the strong survive. I don't know what's happening. Why would the stock market be all-time highs? Is it because there's $50 trillion still sprinkling around the market? I don't know what's going on. Are the rich just buying it up all across the world? I don't know what's happening, you guys. It's a really messy world out there. No one can navigate this.
Yeah.
Yeah.
I want to know what everyone that's watching this thinks too. Please, put your thoughts or your questions or your comments and what you think, your conspiracy theories down in the comment section below, because we're going to have fun answering you.
Yes.
We want to get some participation. And one day I think we need to do an actual real live one on YouTube. So that way, people can ask questions right there on the screen and we can answer them too.
I think we're live on Facebook right now, but no one's watching us. When we first started doing this, we used to get a lot of people watching us, but I don't think mortgages are that sexy anymore.
Yeah, right. Well, yeah, we all have to just dress differently.
Marga, we're talking to you over there. That's our camera girl.
That's why I'm trying to dress less business now.
Hi.
Hi, Marga. All right, well, she's going to be the thumbnail for this video. So look out for Margaret. She's our camera girl. And we told her we need her to look, make it look pretty because we're just a bunch of ugly guys here.
Yeah.
All right. But let's wrap it up. And I want to thank everybody. If you guys have questions, like Eric said, please ask them in the comment section. We will answer them for sure.
Yep. Let us know what you think about the housing market.
And Eric, I just want to let you know I wore my Bass Pro Shops flannel here for this one today.
Good, yeah. All right. I got a whole closet.
There she is.
Flannels.
Hi.
Come on, pull that. Gotta push that. She's got her face cut off again. Yeah. She's the brains behind the whole operation, everyone, if you're watching this.
She's the engine behind
You guys wrap it up first before we talk.
Okay.
Okay.
Everybody. We'll see you next Thursday.
See ya.
Right.
Bye-bye.
Everyone. Bye.
Bye.